I'm Tom Ryan. I'm one of the co-founders and CEO of ICR. Hold your applause until the end. No, I'm kidding. Thanks for being here. It's 27 years of doing this conference. It's become such a big and cool event and kind of a must-attend thing every year. We appreciate everybody's support, particularly all our sponsors. We're very lucky that Michael Saylor agreed to come here and speak to us today. I know a lot of you were in meetings and may have missed his keynote at noon today. Super fascinating. It'll be up on YouTube probably within 48 hours in case you missed it. There were, I don't know, 100 slides really making an incredible argument for the Bitcoin standard. Today, we also have another friend of ICR, Morgan Brennan of CNBC. I don't have her bio to read, but she's been a great friend, moderated the panel with, or a fireside chat with Jared Isaacman last year, the Shift4 payment founder, and oh, by the way, the commander of the SpaceX fleet, so that was cool. But would love to bring Morgan and Michael up here, and we'll hand it over to them at this point. Thank you so much.
Tom, thank you. I think I am maybe on this side, looking at my mic. So it's an honor and privilege to be here tonight, and it's great to be in this room. And Michael, it's great to be here on stage with you, Michael Saylor, the founder and chairman of MicroStrategy, and one of the most, I would say, extraordinary and fascinating people in tech and finance today, given the strategy you have laid out and what that has meant in terms of returns for MicroStrategy and the message you are now carrying to the rest of corporate America. So maybe we'll start there, because you did give a presentation earlier today, and it was standing room only. And it was a message for CEOs and companies, given what you have been doing in terms of adopting Bitcoin at MicroStrategy.
Yeah, I think I won't rehash the presentation at lunch, but what I'll say, if I was called into a boardroom, and I go into a lot of boardrooms, and I talk to a lot of CEOs, and they wonder, you know, how can we create shareholder value? My message is, and this is the mega big idea, 60,000 publicly traded companies are capitalized on the US dollar or a dollar currency, a dollar peg currency like the euro or the JPY, and their capital asset is a sovereign bond. It's like a treasury bill, short dated. And that has been the status quo for about 100 years, certainly since 1940. If you want a capital asset for a company, it needs to be a liquid, fungible commodity. I mean, that's long-term store of value money, if you will. And so that's treasury bills. And the SEC 40 Act, it basically said, it regulated the amount of securities that a public company can hold, no more than 40% of your liquid assets. And when that happened, that meant that everybody in the public market was stampeded into holding treasuries. And treasuries generally yield 3 to 5% returns, 3% after tax. The cost of capital that we've all been taught is the S&P 500 index. And if your company, if your stock is appreciating faster than the S&P index, you can declare yourself to be victorious. And if you have an equity and you're underperforming the S&P index, you know, you're normally thought to be wanting. And I've been public company CEO for 30 years, or no, since 1998 I was. And my investors would say that very simply to me. They'd say, look, if you can't beat the S&P, give us the money back. Because a brainless investor can take the money and buy the S&P index, and they can do that. That is the hurdle rate. And it doesn't take a rocket scientist to figure out that if you're buying T-bills and you're getting 3% after tax, and if the hurdle rate is 12%, you're underperforming by 9%. That means holding $1 billion of capital, you burn $90 million a year. Holding $100 billion in capital, you burn $9 billion a year in shareholder value. And so the big idea here is that in the year 2024, the SEC approved the first digital commodity in the history of the world, Bitcoin, and fair value accounting became optional. And in January of 2025, this month, fair value accounting for that digital commodity became mandatory. And we expect in the first week of the Trump administration for SAB 121 to be repealed, and that means that every major bank in the world will be allowed to bank Bitcoin. So what you have is a status quo for 80 years where a corporation could have all of their assets in real estate, in gold, in soybeans, in oil, or in treasuries. But of course, the only thing that looks liquid and fungible is treasuries, and it doesn't beat the cost of capital. And now, Satoshi invents this new digital commodity. It takes 15 years for people to decide that it isn't tulip bulbs. It takes many years for the government to embrace it. And in the year 2025 is probably the first year where you could reasonably say the banks will probably handle it, the government's not going to ban it, and it really is a commodity. And so now, if you run a publicly traded company, you have a choice between Bitcoin or bonds. And the bonds are minus 10% real yield, and the Bitcoin is plus 45% real yield for the past 8 years. And you know, you might not be sure that you're going to keep getting plus 45% real yield, but I would submit to you that even if Bitcoin's returns collapse to the S&P index, and if you said it's just as good as the S&P, having a commodity that performs like the S&P is 10% better than using a bond. And so the real revolution in corporate finance for a CEO is you have the opportunity to recapitalize a company on a BTC standard instead of a USD standard. And what that means physically is you go from being negatively polarized to capital to being positively polarized to capital. Instead of being repulsive to capital, you're attractive. Wouldn't you like to walk into a meeting and be attractive instead of being repulsive when you walk in the meeting? And what that means to MicroStrategy is we just stumbled on this. We discovered this. We weren't trying to discover it. We were in the middle of the lockdowns, and we were kind of irritated, frustrated, desperate. And so we had $500 million of capital with zero return, and we thought we got to invest in something. Should we buy gold? Should we buy art? Should we buy real estate? Should we buy diamonds? Or should we buy crypto gold? And we thought, well, we'll buy some crypto gold called Bitcoin, and we inadvertently recapitalized to the BTC standard. And then, of course, if your capital is returning more than the S&P 500, you're creating shareholder value. How much capital can you gather? Like, if I'm a hedge fund and I say I return consistently twice the S&P 500, how much do you want to invest in me? The answer is, how much money do you want? And if I go to you and I say I'm a hedge fund and I consistently underperform the S&P by 50%, how much capital do you want to invest in me? None. You're either magnetically attracting the capital or you're rejecting it. So MicroStrategy stumbled on a new idea, recapitalize on an asset which is accretive, not dilutive. And when we did that, we started attracting more capital. We went from having $500 million of cash non-performing, like a liability, to having $45 billion worth of Bitcoin going up 60% a year. And we went from a $600 million enterprise value to a $100 billion enterprise value. And we went from not being able to borrow any money to borrowing $7 billion for almost nothing. And we went from not being able to sell, we couldn't have sold the entire company for $10 a share. We couldn't have sold it for $1 billion or whatever, to being able to sell $18 billion of equity at, 30x the price. And what's happening? We simply changed the polarity of the balance sheet. And I think that's the exciting opportunity for a public company or any financeable company, any company that can raise equity or debt financing has a use of proceeds which is transparent, high speed, accretive, and scalable. And you didn't have it 4 years ago. You didn't have it 10 years ago. You never had it for 100 years. All corporate finance textbooks, every course at Harvard, they're all built on a US dollar treasury standard in the absence of a crypto capital network. And I think now you have to rethink corporate finance. You have to rethink everything.
You just said so much that I want to like dig into.
You know what? I was really enjoying the fact that I would never ever get to say that on CNBC. I would have been cut off.
Oh yeah,
in
like
30
5
seconds.
minutes ago.
That was the most you ever listened to anybody say anything, isn't it?
No, probably. I mean, on TV, but no. This is what I
Okay.
always love about these types of formats: is you can sit down, you can really, dig in and have a nuanced, contextualized conversation. There's a lot you just said. I'm gonna take it back to something, and at the risk of being basic here, but I can't tell you at least once a week. And I find with some of the people who are considered some of the smartest people in the room, I find myself in conversations with C-suite, with finance people, with others, and they say, well, why is it not tulips 2.0? And I don't get Bitcoin and how a digital commodity can be a store of value. So I just want to take a step back and get a sense from you of why it's not tulips 2.0 and how you came to that conclusion back in 2020.
I think if you could build it from first principles. You said, okay, I got 100 rich families. They live in 47 countries. And they all have this thought that they don't really trust their banks, and they don't really trust their governments, and they don't trust the currency. And they're okay in their country for now, but they might need to leave their country sometime in the next 30 years. And so they come together and they think, where should we put our money? Okay, like the big idea is we want to keep our money. Okay, and so, as I said, if God came down and said, I'll run the bank for you and I'm going to issue you God coin, there's going to be 21 million of them, and then you can telepathically move them between each other, and I will custody God coin for the next 1,000,000 years for free for you, then all these rich people would put their money in God's bank, and they would use the God coin, and it would serve as a store of value for them because it's better than gold, it's better than diamonds, it's better than buying Picasso artworks, it's better than buying the local bonds, in whatever local African country you live in, etc. But God hasn't chosen to do that. So the next best thing is maybe they decide to hire a computer programmer and they get some cypherpunk or some engineer and they say, can you actually program a digital bank that does the same thing? So it's not going to be God coin, it's going to be Bitcoin. And we want you to set it up so that we can buy, so you've got 21 million of these units. And we're going to put our money in the Bitcoin bank. And that way we don't trust any other bank and any other government. And it's a network that we all join, a secure monetary network. And then at some point, one of them says, well, I don't think I trust you. And so none of the 100 families trust each other. And maybe even if they did, they don't trust their idiot grandsons that will come along in 60 years. So the question is, how do you actually create the Bitcoin network or the Bitcoin bank such that it is stable, it'll go on for hundreds of years when no one trusts anybody? What's the solution? And the answer is, we create a version of the software and we give it to everybody. And everybody on the network gets to run the software, and the software checks everybody else's software, and anybody that ends up lying gets kicked off the network. So every single family runs a version of the bank, and maybe every person in the family runs a version of the bank, and that's how we get to a decentralized network. Pretty soon, everybody with money on the network is running the software. Now, how do you secure it? Well, we need somehow to give it some anchor in the real world. So the software we run turns electricity into hashes, and the hashes are used to randomize the transactions on the network. And if you end up with billions and trillions and hundreds of quadrillions of hashes, pretty soon nobody knows who's going to build the next transaction block. But what you do know is that it's impossible for you to hack the thing with any sleight of hand. And so why is it not tulips? It's not tulips because all of the smart money in the world wanted to solve this problem. Why wouldn't you, right? Like for 1,000 years, people have wanted to keep their money. It's like the theme of human history. People want to keep their money. So they want to solve the problem. This is a crypto solution to the problem. I create a bank in cyberspace to keep my money. And then it gets copied 100,000 times. And the first 50 times it fails, and then eventually someone has a good one, and we call the good one, the one that won was the one that won, right? I mean, why did you win, and why did everybody else lose? Someone had to win. There had to be one Google. There had to be one Microsoft. Why are we speaking English? Why aren't we speaking French? There had to be a winning language, and why do we use the US dollar? Because there was a winner, right? So at the end of the day, the idea is simple. It's a decentralized network protocol to keep your money without depending upon a government or a corporation or without relying on anybody, right? It's a protocol for economic integrity. It's obviously a good idea. You can duplicate 1,000,000 times, just like you can copy Wikipedia 1,000,000 times, but there's got to be one winning network, and the winning network is the one where all the smart people with the money join. It's just like, you know, if everybody puts their money in JP Morgan and you have Yo-Yo Bank, which is cheaper, but all the rich people have their money in JP Morgan, it's probably safer to put your money in the bank with all the rich people. Why? I copied New York City and Kansas. Why don't people move there? Well, they can either go to New York or they can go to Kansas, York, and they just went to New York. There's a lot of reasons why. And so Bitcoin is the most powerful crypto network in the world. It's got all the computer power. It's got all the economic power. It's got all the political power. It's got all the electrical power. Is it not tulip bulbs? It's 20 nuclear reactors worth of electricity, right? That's how it's not tulip bulbs. And another way to say it, though, it is basically, it is a monetary union. If you join a union and 1,000,000 other workers join the union and all of you get together and collectively negotiate your salary and your salaries go up by 50% and some guy writes an article saying, isn't that tulips? What is, no, there's 1,000,000 people, we all join together to protect our own interests. How about a 1,000,000-person army? I got an army in front of you, we have guns, you disagree with me, you could say it's not an army, but there's the army, right? So Bitcoin is, in essence, it's a monetary network, and it formed organically through a competitive process, and every weaker idea or inferior idea failed in the marketplace of ideas. And the ultimate endorsement of a monetary network is somebody with $1 billion willing to put their money into the monetary network. And if they are, then is someone else with more money willing to support another network? And the answer is all the money chose this one. And that's why it's not tulips. It's just a network.
So we're a week out from inauguration. What does a Trump administration mean for this? How much hinges on the fiat piece of this and the fact that you have a dollar that is devaluing? You have a $37 trillion debt load here in the U.S. And I know I've had these conversations with bankers, for example, that, you know, Bitcoin is, from that standpoint or a geopolitical standpoint, it's about hedging your bets in that world.
You know, I mean, there's a lot of narratives. Some people would say the reason you want Bitcoin is because the currency is being debased, and that's definitely true if you live in Lebanon or you live in Venezuela or you live in Africa. When the currency collapses in 5 years or 10 years, then obviously you want the Bitcoin. But there's another reason the Bitcoin price goes up. And the other reason the price goes up is because it's digital. And that just means that at the end of the day, if I can move $1 billion from New York to Tokyo and back again, every hour, every second, every millisecond. There's utility in that. Digital books, digital education is a million times faster, cheaper, lighter than the real thing. And so the digital form of capital is valuable. Even if you ran the country perfectly and there was no inflation, but you could still program the money to move at the speed of light 24/7, 365, and put a AI that's a billion times smarter than me or you in charge, there would still be utility for that. And then the third reason it's going up is Bitcoin represents digital capital or capital in cyberspace. I give you $1 billion and I tell you buy stuff in Russia. And so you buy a bunch of stuff in Russia, and then what? The Russian government perfectly operates in every way, and then you stop the passage of time and nothing ever decays or grows old, and then I guess it's almost as good, but not digital. But the point is, the passage of time continues. Governments don't run efficiently. The mayor may not do what you expected. Stuff rusts. There's a hurricane. There's a fire. All of those things are entropy and chaos in the real world. So it's my long-winded way of saying Bitcoin is valuable because you escape the entropy and chaos of the real world. Bitcoin is valuable because it's a million times faster, smarter, cheaper because it's digital. And Bitcoin is valuable because nobody can debase it. And you only have to believe one of those three things to think it's going up forever. But of course, I think all of those things. It's just a better idea. And it's going to continue to appreciate in price with the passage of time, with the improvement of technology, and with the debasement of the currency, all three of which we can expect.
It goes up. It's been going up dramatically for the last couple of years, but not without dramatic falls and retracements along the way. We're seeing one of those right now after it crossed 100K a couple of weeks ago. It's volatile. It's a volatile asset. So in terms of strapping your seatbelt in and going along for the ride, what does that look like? Especially, and I'll ask you because you're buying a heck of a lot of Bitcoin, and MicroStrategy moves with the price of Bitcoin.
Well, so first I would say volatility can be viewed as a feature or a bug. If I give you $1 billion on your balance sheet and you have it in bonds, the vol is 5. It's like putting $1 billion weight in your backyard. It's not going anywhere. It's sculpture. But if I fashion that sculpture into a flywheel and I spin it at 60 RPM or 60 vol, it's now a turbine. And you can imagine if you're spinning, a very heavy, a 10-ton weight at 60 RPM, you can plug a machine into it. You can actually power, a factory or power a company or power a city with it. And so volatility is energy. And with MicroStrategy, we actually run the company to create the volatility. So we have $45 billion of Bitcoin and we're spending at 90 vol, then we get a $100 billion options market that forms. And the result is it creates so much suction, so much energy. There are people that own my stock that don't know what we do, that don't know what Bitcoin is, that don't care. All they care about is I can sell the volatility. I bought the MicroStrategy thing. I'm getting 150% interest on it, whatever it is. If it doesn't go to zero in the next 3 months, I'm getting rich. Like that's the power. But that's not unlike I spin a fan 60 RPM and I blow you off the deck, of the ship, right? There's energy in these things. It's a turbine. So I think volatility can be harnessed. I would say if you're an investor, the right way for you to look at it is it's for long-term capital preservation. So if you have a portfolio of capital you don't need for 4 years or more like ideally for 10 years, then the portion of your capital that you would hold for 10 years and invest, you put some of that into Bitcoin, you'll be fine. I don't think you should put capital you need for 4 days, 4 weeks, or 4 months. You shouldn't use, it's not a working capital thing. It'll give you a coronary and a heart attack. That doesn't make sense. But my last, I got 2 other points. One is it's volatile because it's the most useful thing in the world. It's because if you need $10 billion of credit on Saturday night to short the market, you can get it from the Bitcoin network. You can't get it from any of your other assets. If you needed to sell something for $1 billion in 5 minutes, you can get it from Bitcoin. You cannot sell anything else on a Sunday morning in 5 minutes. If, on the other hand, you wanted to take a long position on Sunday morning after someone else took a short position Saturday night, you can do that with Bitcoin. You cannot do that with nearly any other asset. So it is useful financially, and that makes it volatile because anybody can express an economic opinion as hard as they want anywhere in the world, and everything is linked to everything. And my last point, it's going up 60% a year for the past 8 years. If it was going up 60% a year in a perfect exponential with a beautiful curve that you drew with your artist hand, if that's the way it happened, then people stupider than you, richer than you, would have all the money, right? If I'm telling you it's going up 60%, and if you do the work and you can understand why thermodynamically it is, like, why is the water flowing downhill? Why does the waterfall look that way? Because there's gravity, and the gravity is pulling it downhill. Why are people running from insecure assets to secure assets? You know, why does capital flow from one place to another place? Why would you sell your Venezuelan currency and buy dollars? Was that random, or is there a reason, right? If you understand the fundamental thermodynamic, physical reason why the capital is flowing from 20th century assets to 21st century assets, from physical to digital, from financial to digital, if you understand that, then the best thing that could happen to you is for it to appreciate in a volatile fashion, because everybody else will be scared away from it. The 60% a year is still 60%, whether it's volatile or not. The difference is, because it's volatile, MicroStrategy is able to go from $1 billion market cap to $100 billion market cap because people are afraid to do what we're doing. If it wasn't volatile, Bill Gates and Warren Buffett and Charlie Munger would have bought it all, and I wouldn't be sitting on stage today right now. You would be listening to masters of the universe that were famous long before I came along, telling you how they bought the Bitcoin and how smart they are. And you would be like, well, of course we all bought the Bitcoin, because if it just goes up perfectly forever, then, like, where's the opportunity in it for the committed, right? For the convicted, for the people that want to do the work. So I kind of feel like there's a certain natural selection to this. If you like money, if you need the money, if you're willing to take risk and you're willing to bleed to get the money, then Bitcoin will give you the money, right? But those are the people that deserve it. If you're just rich and arrogant and you only take risk-free investments and you just expect to stay rich, then, you really want to help them? Do they need help, right? I mean, I don't think so. So I think the volatility is a feature that's a benefit to an investor. It's a benefit to a corporation. It's a natural characteristic of a life form. It's alive. It's vital. It's volatile. I think that there are two big ideas in corporate finance that are traditional, Morgan. One, volatility is a bug, and I think volatility is a feature. And two, and I'm going to say this in a hyperbolic way, but to make the point, I think conventional corporate finance treats capital as it's toxic. Like, it's capital is toxic to the corporation, and I think capital is virtuous. Right? What rich family would give away all their money, right? But every rich company does, right? Apple does, Microsoft does, NVIDIA does, Meta does. They all brag about the doing of it. They all brag about their buybacks. They all brag about their dividends. It's like they're literally getting rid of their capital as fast as they can. And why would all these people that you're invested in that you think are so smart, if they're so smart, why are they desperate to get rid of the money? And the answer is the capital asset they use is toxic to them. If I give you $1 billion and you invest it in bonds that have a negative real yield of minus 10%, then you're destroying $100 million a year. So if they're smart and they know that, they know they have to get rid of the capital. They have to flush it out of the system as fast as possible. And I think that there's a new idea. The new idea is adopt a different capital asset called Bitcoin, and you get to keep the money. And now capital is not toxic. Now capital is life-affirming. Now instead of blowing away $100 billion of capital, now you could keep the $100 billion of capital and it grows 30, 40% a year, and pretty soon you've got $500 billion of capital and your shareholders get rich. That's the big idea.
It's a big idea. You actually made this, it is. And I say this knowing MicroStrategy has outperformed these other companies, the Mag 7 companies, other asset classes, since you adopted a Bitcoin strategy pretty dramatically. You made this pitch to Microsoft, speaking of, a couple of months ago. Microsoft turned around and said to shareholders, vote this down. Shareholders did vote this down. So what does it take to get some of these other big companies with big balance sheets and a lot of cash sitting there that are doing this, that are handing their capital away to get on board with what you're pitching?
Bitcoin is on a need-to-know basis. If you don't need to know, then you won't ever figure it out. So Microsoft is arguably right. Microsoft is one of the 7 greatest companies in the world. Maybe it's the greatest company in the world, but some people might think it's the first or the second or the third. So if you run the greatest company in the world and you're a shareholder in the greatest company in the world, arguably you don't need to know anything. You don't need to take any risk. The companies that are going to embrace Bitcoin are the ones that aren't Microsoft. When you get to the point where you realize you can't compete against Microsoft, when you're not the digital monopoly, when you're one of the 27,000 retailers that got crushed underfoot by Amazon, right? When you're one of the 47,000 media companies getting beat to death by Google or by Meta, when you look at your stock and it's been stuck in a rut for a decade, right? If you're the CEO or the CFO of that company and you ask yourself honestly, am I going to be able to outperform NVIDIA or outperform Google or outperform Apple? Do I have a monopoly on 1 billion people? Do I or not? If you have a monopoly, you're getting regulated. If you have a digital monopoly that's unregulated, you can actually outperform until you get regulated. The companies that are embracing Bitcoin are the ones that they're the zombie companies where there's like, I'm public, but I'm stuck in a rut. The likelihood that I'm going to start to grow organically 20% every year for the next decade is like less than 1%, right? Once you get to the point where your odds of actually growing organically 20% a year for the next 10 years are less than 1%, then then at least at that point you need to invite or consider a new idea. And I think normally what happens is when a company hits that wall, they decide to sell themselves, right? That's one exit. I just sell the company. I had 100 competitors, Morgan. Every one of them sold themselves over the course of 20 years. Every one. So you sell yourself. If you can't sell yourself, your next idea is LBO. I'm going to take myself private. I'm going to basically, here's the big idea. I have a low growth company growing 5%. But if I can borrow money, cheap capital, and lever up, then I can actually make my low-growth company look like a high-growth equity. Who does that? Apple's been doing that for 5 years, right? Borrow money, buy the stock back, lever up the equity. So sometimes they go and do an LBO. Third, they work themselves to death until they have a heart attack, in frustration. I mean, like, I think I tried 25 different things to break out of a rut before I discovered Bitcoin. I bought the stock back. I spent money on marketing. I invented 20 products. And it's just like hitting your head against the wall. So sometimes they do that, and they just give up, and they retire in dejection. And now you've got this fourth idea, adopt digital capital, right? Recapitalize your company, invert your balance sheet. right? That's the new opportunity. I think in the history, Bitcoin's a paradigm shift, and if you study paradigm shifts, Thomas Kuhn, he says people only embrace new paradigms when there's a war, right, or when they die, right? Like science advances one funeral at a time, right? One of the famous quotes. It's like, so in this particular case, who gets crypto? Who gets Bitcoin? The 20-somethings. 20-something person, a 20-something business person, they have no money, they have no hope, they're not going to get ahead the way their father or their grandparents did, right? And so you're a teenager, or a 20-something, or a 30-something, you're like streaming, YouTube, crypto, something. They have everything to gain, nothing to lose. And then you have people that are caught up in a war, whether it's the COVID war or the lockdown, or guess what? My bank just stole all my money in Lebanon, or a meltdown. Those are the companies that will flip first. The vote, by the way, at Microsoft was 99.5%, against 50 basis points in favor of. The proposal was investigate Bitcoin. That was research Bitcoin, and management recommended they wouldn't, and it was 50 basis points voted in favor. And I think it's just demonstrative of the point that, if you've got a great company and happy shareholders, people don't change. But that's okay, right? Because rich, successful people that don't need money don't have any need to reconsider the monetary proposition, right? Bitcoin is money for people that need it. It's not money for people that have too much of it already, or already have a way to get it. So there's a natural selection here, and there's a certain elegance to the entire process by which this idea spreads.
I could keep going with you, but it's about 6:45, and what I do want to do is open this up to the room and see if we have any questions or comments from the floor.
Yeah, people bring up quantum computing every 2 years. They are thinking about it in 2010, 2014, 2012, 2018, 2020. The latest is Google announced a quantum proof of concept, and that put it back into people's minds again. Google's quantum computer doesn't have a practical application. All of the engineers that I know of in the space think we're 10 to 20 years out before we've got a computer that we've got to consider that might be able to crack modern encryption. When we do have a computer that can crack modern encryption, then it's got to be addressed by Microsoft, Apple, Google, the government, every bank, and Bitcoin will be the last thing to crack because it has the strongest cryptographic security. But the way you should think about it is right now it's FUD. In a decade to 2 decades, it might be real. If there ever is enough computer power to threaten modern encryption protocols, everybody's going to upgrade their encryption protocols. The most important thing to understand about Bitcoin is not a system, it's a protocol. It's not like a single app, it's a protocol. It's like the English language. It's like, what happens when someone invents a new word that's not in the English language? Well, we're going to add it to the English language. What if, it's an evolving protocol. The way to think of it is, Bitcoin is all the smart people in the civilization that want to keep their money. And what's going to happen? All the smart people in the civilization that want to keep their money through cryptography, they're the ones that are going to upgrade the system so as to keep their money, right? And so it is a dynamic thing. Bitcoin does evolve over time. But if you see it as a protocol, like you use base 10 math, you speak the English language, you think in Bitcoin, it's a protocol, right? The more people that adopt the protocol, the more powerful the protocol gets. There's no reason why the protocol shouldn't last another 500 or 1,000 years. And yes, it will evolve, right? There'll be new techniques. and the software that we're using to run the Bitcoin protocol, it will go through versions, and it will upgrade and update from time to time. But I don't think you have to be concerned about quantum computers for now.
Any
Yes.
thoughts on likelihood or timing of SVP to Bitcoin? Is there with the new administration?
I think there'll be a lot of discussions about that in 2025, and there's now supportive Congress and supportive White House, but I don't know what final shape that'll take. That'll be a very political decision. But I will say it's a big shifting of the Overton window, because 4 or 5 years ago the discussion was, will the government ban Bitcoin? And now the discussion is, will the government back the dollar with Bitcoin? And that's a pretty profound shift in 48 months.
Do we have other questions? Okay.
Yes, sir.
Why wouldn't it be better for corporate treasurers, corporations, dividends or buyback and give capital back to shareholders for benefit rather than for treasury?
If your company generates, pick a number, $1 billion a year in cash flow, if you dividend it back to the shareholders, you're hitting them with a dividend tax, and then they have to go find something to invest it in, because you're basically saying that you don't know what to invest it in. So presumably they're investing it in the S&P index, and you're giving it to them because you don't know of anything better than the S&P index to invest it in. And so if you had something you could invest in which delivered 4 times the S&P index, then presumably, instead of giving it to them and having them capture whatever, the after-tax dividend, you could actually reinvest pre-tax and generate 5x the returns. So that's one reason, because you just make the shareholders a lot of money. The other reason is, if you're Microsoft and you dividend out all your capital, then Microsoft ends up being valued, 5% of the enterprise value of Microsoft is tangible assets, 95% is forward expectations. So in essence, the entire stock trades on forward expectations, and if they were to simply go on a conference call and lower forward expectations by 20 or 30%, the stock crashes. If they miss a quarter, the stock crashes. So when you're dividending out, or when you're dispersing capital via buyback or a dividend, you're decapitalizing the company. So it's the analogy I give is, Jeff Bezos and Bernard Arnault and Elon Musk, they're not the richest men in the world because of forward expectations of their wages. They're the richest men in the world because of what they own. They own stuff. So if Elon Musk said, I've decided to give away all my money, am I still the richest man in the world? Well, no, you're not. You just gave everything away. You gave away your assets. And the same is true with any wealthy family. It's the same true with any institution. If you just gave away all your assets, you wouldn't have anything. So we've normalized this idea that somehow it's a good practice for a company to not have assets. And that's because we made the capital asset toxic and dilutive. But in fact, if a company gives away all of its capital and has one bad quarter, technically it's bankrupt. And you saw this during COVID lockdown. I mean, every LBO company, every company that leverages up in order to compete with Amazon's, and this happened for 20 years. People are trying to grow their cash flow per share or their earnings per share by 15%, but organically they're only growing 5%. So how do they make up the difference? They borrow money and they buy the shares back. And so when they lever up, they end up with no capital. And so they have one bad quarter, your airline shuts down, your hotel shuts down, your retailer shuts down, you can't make payroll, you're bankrupt. And then 20,000 people get laid off. Okay, and the towns end up with 27,000, shuttered retailers. And why are they shuttered? Because they decapitalized. Right? And how is that good for anybody? The shareholders lost everything, the employees lost everything, the towns lost everything. And it's like, if you walked into your dad's office and said, Dad, I have a big idea. Let's have the family just give away all of our money and then you just work harder. Your dad would say, well, son, that's interesting, but we think we'll keep the money because I might break a leg and not be able to work, and this way your sister won't starve to death. There's a reason we have capital, right? That's why we keep it, just because we might not be able to work forever harder. And I think the tragedy of the modern era is when you run a money printer and you inflate the currency by 7 to 10%, the hurdle rate, the organic growth in EPS has to be 10 to 15%. And if you can't hit that hurdle rate, you have to basically go into debt. And what you do is you replace equity capital with debt capital, and all of these good companies end up bankrupt when they have 1 or 2 or 3 bad quarters. So that's a long-winded answer. The short answer is, if you had $1 billion going up 30% a year, you make $300 million a year doing nothing. Why wouldn't you want to? Like, why wouldn't you want to invest something which makes you 30, 40% a year? Because, I mean, it's money, right? It's like you can make the money.
Do we have any other questions?
Mike, a quick question, color on ETFs. You haven't mentioned ETFs.
Yeah.
I like your New York real estate analogy because there's only so much land, and it looks like the big asset managers are stepping in and buying up a lot of that land through the ETFs.
Right.
Can you talk about that and impact on Bitcoin supply?
We're 1 year, I think, today or this week.
Yeah, this is, they're 1 year old now. It's the most successful ETF launch in the history of the world. BlackRock's IBIT is the most successful ETF ever. And what's going on is permanent capital is flowing in via the ETFs, and that's the long-term store of value holders that just want to hold the asset as opposed to trade it. It's a very positive dynamic for the space. And the ETFs solve a bunch of problems. They solve the compliance problem. Like in Hong Kong, you can buy the ETF if it's a Hong Kong ETF and the Bitcoin is custodied in a Hong Kong bank. Just like, Australia or Brazil would like for the Bitcoin to be in their country. So they solve capital control issues, they solve compliance issues, they solve tax issues, they solve convenience issues. You can pick up the phone, call your broker, and say, buy $1 million of this in 15 seconds, put the phone down, and it's like done, and it's no frills, easy. So they've been helpful. They're part of the ecosystem. Lots of other companies and actors are part of the ecosystem. I mean, the bottom line is everybody's competing for 450 Bitcoin a day. At 90, 95,000 a Bitcoin, you're talking about $40, $45 million a day. When you've got $45 million a day of organic demand, then that's all the natural Bitcoin available for sale. The price has got to go up, right? And so right now, the fundamentals are very positive, because all of the slack is taken out of the system. Bitcoin is like this, it's like, 100 people move into a neighborhood and then one rich idiot dude buys the 100th house at twice the price the last person paid for it, and everybody's property value is double. Like, you're hoping for the rich idiot dude to buy the last house, and then it only takes one marginal buyer to lift the property values of the entire network. And I think that's a dynamic that will continue forever. With volatility, it'll go up and down, but generally the dynamic is capital is flowing from everywhere in the world on this network via all these avenues. Yes, sir.
We're going through a little bit of an inflation scare. It's hurt risky assets like equities, and it's hurt Bitcoin. And I think a lot of people want to see a decoupling and a hedging behavior out of Bitcoin. So, do you have any thoughts on that?
I just think you can't really focus your Bitcoin thesis on its short-term trading dynamic. I think you just have to say, this is Cyber Manhattan. In 300 years, my grandchildren's grandchildren's grandchildren will be insanely rich if I buy it now. And if I don't buy it now, they won't be, right? It's like it's property you want to hold for 100 years. And if you bought a house in Manhattan and you insisted on getting drunk at parties on Saturday night and walking up to everybody and saying, I want you to buy my house for me right now for cash, how much will you pay me? You would sometimes get bids that are less than the price you paid, and it would depress you. You'd probably drink more, right? It's like if you insist upon liquidating all your assets every minute of the day for cash, you're going to find a very volatile bid-ask, and you're going to get depressed. Like, I can't sell it for more than I bought it today, or yesterday a guy offered to buy my apartment for $180,000, and today they only offered $120,000. I'm freaking out. It's like, you're freaking yourself out, right? There is no other real estate asset. When you buy commercial real estate, you don't force someone to give you an all-cash bid every minute of the day and then obsess when the price goes down or goes up. You just say, I'm buying it, in a decade we'll check back again. But the truth of the matter is, you bought the real estate because you intend to rent it, or you bought the real estate because in 15 years you'll refinance it. You know, so if you think about New York real estate families and how they think, I bought the most scarce, desirable property. I got the best capital. I'm holding it for the long term. I'm never going to sell it. I'm just going to rent it. I'm going to develop it. I'm going to refinance it. I'm going to give it to my grandkids. If you think about Bitcoin like that, then you're good. That constant bid, if you stare at it, you know, with the wrong attitude, it just gives you anxiety and a heart attack, and it'll give you mental health issues. But on the other hand, if you're more mature and you look at it and you say it's jittery, then the right answer is, I'm going to sell the volatility, right? I'm going to sell. I want it to be jittery. Like, you want it to be jittery because that gives your options value, your equity value. MicroStrategy stock trades $5 billion in a day. Our stock trades more than Microsoft a lot of the time. Why would our stock trade more than theirs? Because ours is jittery, it's volatile. It's, you know, Bitcoin went from like 98,000 to like 89,000 back to 95,000 like in the 24 hours we're here. It's very jittery, and that means people thought they were long, they were short, they sold it, they panic sold it, they panic bought it back. They've already lived through the equivalent of, you know, 100 quarters of anxiety in just a few days, right? And I'm not selling, right? So the point is, I'm just the beneficiary of what's happening, and I want it to be jittery, but you have to embrace it as the feature as opposed to as the bug. And if you can start to think in Bitcoin and say, it's a feature, it's volatile, and that's what gives me the edge over a person who is less committed, less thoughtful. The person wants it less than you, right? It's like if you live in New York City, you know the value of everything, and occasionally people panic and offer to sell it to you and they mark everything down by 75%. I give you a world. Everything's marked down irrationally by 80%, and it's marked up irrationally by 80%, and you're smart. Do you want to live in that world, or do you want to live in a world where everything is marked perfectly? And the answer is, you want to live in the world where it's all erratic. You get rich that way. In a world where everything is marked perfectly, there's no opportunity for you, right? And so that's the way I see volatility of Bitcoin.
I think we're up against the end of the hour here. I'm going to ask you one quick question. Satoshi, theories on who it is? Creator of Bitcoin, anonymous creator of Bitcoin.
Yeah, lots of theories.
Okay.
But we don't talk about Satoshi. Satoshi is a figure of reverence in the community. The most important thing to know about Satoshi is Satoshi gave us Bitcoin and conceptualized Bitcoin as a gift to humanity. It was the gift of perfect money, if you define money as long-term store of value capital. It's this gift of perfect money, and they meant for it to be gifted to the world without taking any personal benefit or any beneficial interest in it. And that immaculate conception is one of the most extraordinary developments of the 21st century, for sure, maybe of the last 1,000 years of economics. And it doesn't matter who Satoshi is any more than it matters who Prometheus is. Prometheus gave us fire and separated us from the apes. Satoshi gave us clean money, and now you can build an economic life, and maybe you could achieve economic immortality. And Someone probably gave us clean water. I don't, you know.
Mr. Saylor, every room needs an asshole. That'd be me.
Okay.
If I were to say that Bitcoin reminds me of the great tulip bubble and burst of the Dutch, of the Netherlands, you'd clearly tell me I'm wrong. But what percentage of Americans even own Bitcoin? If it went away, if any of our lives changed, if it disappeared tomorrow, because that real estate volatility, the real estate has value because we can live in it, rent it, walk in it. But if Bitcoin disappeared tomorrow, how many of our lives have changed in this room, other than certain people that may or lose money? So, the gentleman who gave us Bitcoin, clean money, God gave us tulips. Both had a crisis of great proportion. And you seem to feel that Bitcoin's not going to reach that fate, ever. And I would take the other side of that bet.
Yeah, my answer to that would be, as a science historian, I've read 100,000 pages of history, and I think the story of history is humanity's condition was improved when we got clean water, clean food, clean air, electricity, clean power, when we got petroleum, when we got cars, when we got nuclear energy, when we got antibiotics. If you look at the plight of humanity for thousands of years, people are dying at age 30. There's a 40% infant mortality rate because the food's dirty, the water's dirty, and they've got no hope. And when they were dying of dirty water and dirty food, they didn't know they were dying of dirty water and dirty food. We bled George Washington to death. Every rich person in the Middle Ages died of gout because they drank red wine, because they couldn't drink water because it was contaminated. And so all of these companies, if you look at the mortality rate of corporation is 99%, the average life expectancy of a company is 10 to 15 years. And you can say, well, we'll just take it for granted. Companies should only last 10 years. Just like, 40% of your kids, maybe they should just die before the age of 5 because that's just the way God willed it. Or maybe we should just die at age 31, which is the life expectancy in Elizabethan England. But the point is, they didn't die because they were genetically predisposed to die. They died because they had dirty food, dirty water, dirty energy. They worked themselves to death. And the best thing that ever happened to humanity was the passage of technology. So Satoshi put his finger on one observation. The observation is the money is corrupt and dirty and it's defective. And you want me to show you how it's defective? I tell you the story, 1,000 stories of people being murdered for their money. Every single story of Jews fleeing from authoritarianism. Every story in Germany of the Protestants, the Catholics murdering each other. Everybody that came to America, they came because they're fleeing for property rights. The entire history of the human race is littered with tragedy because people never had proper economic energy. A type 1 diabetic can't store organic energy. They will eat themselves to death. Fat is the way you store organic energy. Somehow, over the course of hundreds of millions of years, mammals figured out how to store organic energy, and they had fat cells. We as humans have not had the ability to store economic energy properly. We tried with gold, it never quite worked. I could give you 100 examples of it not quite working. I can give you 1,000 examples of hyperinflation dating back to 500 BC of money not quite working. For the first time in human history, we have invented a technology that allows a human to tightly bind economic energy to their person, or for a corporation to tightly bind economic energy to the corporation. What it means is you don't have to suffer an early, painful economic death. And you can tell me, oh, that doesn't matter, but I would point to everyone in Africa. I would point to all of the misery in Cuba and North Korea and Venezuela. I would point to the misery in the aftermath of hyperinflationary incidents that took place in Brazil, Argentina, Venezuela, Russia. I could go on forever. There are literally 100,000 pages. Read The Story of Civilization by Will Durant, and you will find 1,000 examples of currency collapse and economic misery. And this person, Satoshi, offered us this gift. The gift is you get to own your own money, and no one can take it away from you. You get to keep it, right? You get to keep your life force. And what do I think will happen? I think that companies' life expectancy on the Bitcoin standard goes from 10 years to 30 years to 40 years to 100 years. And I think living longer is a good thing. And I think families' life expectancy, is dramatically increased. I could do the simple math for you. The half-life of money in gold is 30 years. Gold debases at 2% a year. 30, 35 years. The half-life of money in Bitcoin is forever. 0% inflation makes your money last forever. So I think that some people will not appreciate it and they won't get it. That's okay. You don't have to buy it. Lots of people won't buy it. By the way, I do think that if you ask how many Americans own it or care, they just tipped the election in favor of Trump. I think they care. I think the crypto lobby is the #1 political force today. So I do think there's a lot of people that do agree with me. They do get it. There are $800 billion to $1 trillion of real money that has been invested in the network. You can trace it if you like. But that doesn't mean it's for everybody. Everyone didn't install electricity in Florida, air conditioning, right? Right, that's new. All sorts of technologies don't get embraced for 30 years, and this won't. But I would say clean money is just as important as antibiotics. It's just as important as fat. It's just as important as clean electricity, right? So that's my answer to you. It's technology. It makes the world a better place, and I think that for 1 billion human beings that are destined to economic misery, for them it's the matter of life or death. You're not one of them, right? We'll stipulate. Lots of Americans aren't one. But drop yourself in Nigeria, where it's illegal to own the dollar, where the naira is going to zero, and then try to give some money to a person you want to help in Nigeria or capitalize a company in Nigeria, and tell me how you're going to do it. Because generally the answer is, well, we just don't. Everybody stays poor, every company fails, and all the economies collapse. And that's the same answer as a type 1 diabetic. We just don't. We just die. And, I think insulin to a type 1 diabetic is Bitcoin to an African. It's a useful thing. Thank you.
Thank you. Michael Saylor.